Hey everybody, welcome to the show. I'm Rebecca McLaughlin-Easton, and this week we're focusing on business at this unique time in history, asking how is the corporate world adapting and how might the investment landscape change forever?
We're going to come out of this completely, like a totally different world in terms of the economy and the financial markets.
A little bit later in the show, we'll find out why the smart money could be flowing into Kuwait's stock market if it achieves emerging market status this year. But first, as investors try to navigate volatile markets, we're asking where are the safe havens, where is the money to be made, and is now the time to buy or to sell? Recent commodity and financial market swings have left some investors running for the door, with many analysts struggling to call the bottom or forecast what shape and duration a recovery might take. Some economists signal that the post-crisis landscape could point to a deglobalization trend, weaker company earnings and higher corporate debt. All of this against the backdrop of the IMF saying the world will likely experience the worst recession since the Great Depression this year, with global GDP contracting by 3%. The Middle East region is particularly vulnerable to the impact of the oil price, which recently sank to below zero for the first time in 21 years. This, compounded with the coronavirus pandemic, prompted the Arab world's biggest economies to commit to stimulus in the tens of billions of dollars. But what do growth prospects look like? And what might be the collateral damage from the global economic downturn for these regional dollar-pegged economies? To find out, from Abu Dhabi, I spoke to Amro Abdu, a market strategist advising private clients and financial institutions. Amro, a very warm welcome to Inspire Middle East. It's lovely to speak to you.
It's a pleasure, Rebecca.
Let me start by asking you, does this crisis have the potential to change global investment habits? Are we looking at a new financial landscape in prospect?
Absolutely. I think it is going to accentuate the difference between the financial world and the economy. They should be linked, but they're not. So the fact that we're going to have more financialization, governments will own more of the economy just by virtue of the fact that they are basically pumping a lot of stimulus money into the economy. So absolutely, I think it's also going to accentuate the difference between the rich and the poor, unfortunately, just because all this stimulus money is going to the capital markets, and not everyone owns capital like stocks and bonds and things like that. So we're going to come out of this completely, like a totally different world in terms of the economy and the financial markets.
I'm going to put you on the spot here, Amro. Speak to the retail investors. Would you buy or would you sell right now? And if you would buy, then which asset classes are you plowing your money into? Is it equities, bonds, gold?
There's a new category called the stay-at-home stocks, which basically the stocks of companies, mostly technology, that allows us to either have a better time staying at home personally or doing business as usual at home. Things like Zoom, for example, has gone up by 106% since the beginning of the year. We have things like Microsoft, Amazon just hit a record high, and Alibaba is the same thing. So all these companies are going to do really well. I think gold is living a time when, excuse the pun, it's a Goldilocks for gold. All the fundamentals are textbook bullish gold. And by that, I mean, gold usually does well in uncertainty. And I think we're going to see 1,800 this year. And probably within the next 12 months, we're going to see another record high.
Can you tell me your average price forecast for oil going forward and what it means for economies specifically in this region who are looking to balance their budgets?
I don't see oil recovering anytime soon, at least the price, for two reasons. One is, there has been so much supply in the past. China today has about 1.2 billion barrels in storage versus 900 billion before this pandemic broke out. The other thing, Rebecca, is I think after we come out of this pandemic, I don't think the economy is going to be the same. So I don't think demand is going to come back anytime soon.
The IMF has given an economic forecast of 3.5% contraction for the UAE's GDP this year. Do you think that's realistic in light of the current situation? And looking ahead to the economic landscape for next year, what are your thoughts?
I think that's a best case scenario, blue sky kind of scenario. I think the numbers are going to be much worse, at least for the rest of this year. The GCC economies generally, they're oil dependent. They are trickle down economies. So as such, it's going to take them, I think, longer than other countries to come back. As far as the UAE is concerned, I think probably it's the one country that is in a better position than all the others, simply because the economy is much more complex. So there's a multiplier effect to any stimulus that happens.
Countries like Germany and the Netherlands are pretty outspoken opponents of what's being nicknamed Corona bonds. Are they right to oppose the debt instruments, or could it be a good idea for Europe right now?
I think eventually they're going to have to do some kind of a shared bond in Europe, simply because Italy and Spain, for example, they will not be able to get the same access to capital markets as the Netherlands and Germany. So Germany can now tap the capital markets at a negative interest rate or a negative yield, whereas Italy, is almost like 2% or 200 basis points higher than Germany. So the danger in that is you are going to have a Greece situation again with Italy, which is much bigger economy and a much bigger debt market. And the problem, if that happens, I'm afraid that the nationalism or the nationalist movements in Italy will become much louder. And we've seen what they have done with Brexit. So eventually, I think they're going to come to terms with initiating some kind of a program with shared responsibility for these bonds. So call it Corona bonds. That's actually a good opportunity to do that.
Restarting European economies is no small task going forward. Of course, governments are facing rising stimulus package bills. Unemployment is soaring. Companies are facing bankruptcies. Impossible to question, but can you see a timeline for when economies can start to normalise?
I think probably Q4 of this year is looking more realistic. Again, simply because we don't know where the end is. And probably Q4 or Q1 of 2021, that's when we're going to see the economy, all engines kind of, trending along. But I doubt that before that we're going to see any meaningful economic growth in Europe, simply because we have a lot to sort out.
Amro, we shall have to wait and see. Thank you so much for your time today.
Thank you, Rebecca.
When a frontier market in this region gets upgraded to emerging market status, it's a big deal. And that's what Kuwait's stock market was on track for, until the COVID-19 pandemic struck. Salim Essaid breaks down what the upgrade could mean for retail investors and what the timeline might now look like.
As the novel coronavirus has affected so many people across the globe, it's also affecting the well-being of global stock markets, not least Kuwait's, one of the oldest in the Middle East. The index has seen its value affected. It's also been absorbing April's news that MSCI, or Morgan Stanley Capital International, will delay upgrading Kuwait from a frontier market to an emerging market due to operational issues regarding the pandemic. The new date is yet unknown and could fall around November, says MSCI. A frontier market denotes one which is deemed relatively small and illiquid. These factors often make it less accessible to investors, whereas an emerging status implies a market is transitioning from a closed market system to an open market one, while developing economic reform programs according to Investopedia. And this status has been applied to some regional economies including Egypt, the UAE, and Saudi Arabia. Emerging market status puts a country's exchange one step away from becoming the highest level of a developed market. And with that comes improved financial transparency, efficiency, and foreign ownership access.
The new classification of emerging market is expected to make Kuwait more open to foreign investment and bring in billions of dollars to the oil-rich country, as it takes steps to strengthen its private sector and aims to be a financial hub in the region.
The MSCI came to its upgrade decision after the Kuwait Capital Market Authority made a number of significant changes, including restructuring laws to increase the accessibility of foreign investors. Many welcomed the news, and last year, Kuwait was the best performing market in the GCC.
Active investors are already started taking position in Kuwaiti stocks. Now, once the upgrade happens, passive investors, based on when they realign their portfolios, they will be replacing active investors. So that cash, the excess cash, the market is expected to decline, but then that will flow to the rest of the market, for rest of the region. So it's like it's a net positive win-win situation for both the regulator, for the markets, and the companies listed in the regional indices, as well as Kuwait primarily.
The benefits of Kuwait's impending new status are numerous, says Ansari, including reforms to enhance the private sector.
Kuwait has one of the lowest break-even oil price in the region. It has the debt-to-GDP ratio is also one of the lowest. It is the most highly credit rating in the region, with fundamentally strong stocks, well-traded, highly liquid stocks, and an economy which is like undergoing number of reforms, number of changes. The regulators are supportive. So all this offers a very complete package to international investors to invest in Kuwait and benefit from the overall growth of the economy.
And Kuwait is looking to further its growth, Ansari says, with the prospect of more state-owned companies listing in the years ahead. For now, however, much remains on hold until the regional and global economy begin to normalize again in the wake of COVID-19.
Well, that's a wrap of our show for this week. Thank you very much for watching. We hope you enjoyed it, and do catch all of our episodes online at euronews.com. Before I leave you with some inspiring Instagram posts, let me just say, stay home and stay safe. I'll see you next time. Businessman Shabab says he believes the global economy will eventually readjust for the better once the pandemic passes. Omani accountant Ahmed shared this post of him working before the pandemic struck. And Abu Dhabi Bank employee Zaid shared this moment taken before the quarantine period.